We'll get started. Can everybody hear me?
Yes.
Wonderful, wonderful. So this is a bare bones basic beginner's course. I think why Danny really wanted to get a gist of how everybody's coming into this is because we are just going straight into the bare bones basics. Before you ever touched your own your cryptocurrency is what we're going to talk about today. So let me just share my screen and we will get started. Danny, would you like to add anything?
No, actually, so Matt used to have a podcast, and we delivered this originally then. I think that was the end of 2017, 7-step intro guide to cryptocurrency. And yeah, it was very relevant then with a lot of people just coming in, seeing the boom of crypto when Bitcoin was soon to hit 20K. So yeah, just curious to see if there was anyone else who was an intro level that this could be relevant to.
All right, so let's get started. A quick introduction about me really quick is my name is Matthew Aaron. I've been in the crypto space since late 2016. Got some $500 Bitcoin and then sold it at $600 and then been in crypto ever since. I started a podcast and a media company, which had a Crypto 101 podcast, a podcast called ICO 101. We had blogs. Danny was part of Crypto 101, where he was an interviewer, and he's the co-author to our book, Crypto 101, Chinese Guide to Cryptocurrency. And we have other different media projects all around cryptocurrency. So that's what we did until we exited that and went off on to do our own separate things. So I made a podcast and a book and what have you, just to welcome people into cryptocurrency and give them the education to start investing into crypto. Danny, would you like to?
Yeah, sure. So I started early 2017, bought some Ethereum on my way to getting into Monero. I thought that sounded pretty interesting. I had originally thought of buying Bitcoin back when it was a few pennies, but I bought silver instead, and that was a bad mistake. I ended up getting really into crypto after Ethereum because I didn't understand any of the subjects. So I started just trying to figure out what the common terms and vocabulary were. And as I started making notes, I created a spreadsheet and I shared it with some friends. And they said, hey, you should turn this into something. You should make this more public, more available. So I created decryptionary.com. It's the first Bitcoin dictionary. Super simple. If you take a look, I literally have little like stick figure drawings over there. I just had some fun creating it and got quite a few traffic. And then I ended up connecting up with Matt. So yeah, like I said earlier, we delivered this in a podcast, this form of the presentation back in the end of 2017. And hopefully you guys will find something interesting in it.
And it was very popular. It's our most popular episode. We have over 120,000 listens to this episode, which was my most popular episode ever. And thanks to Danny. So we will get started here. Slide number 1 is understanding cryptocurrencies. Mr. Dani Amsalem.
Yeah, so just to quickly touch on this, I felt that it's important to understand the subject of cryptocurrency before you ever dive in. And I'm sure most of you who've already been in since 2017 already have a pretty good understanding. But the word itself, cryptocurrency, is just a compound word. It's a combination of two different words. And here you see it's part of crypto and currency. And crypto is short for cryptography. Cryptography is just a part of technology, a method of hiding information. So when you're sending it to another person, it's secure and it hasn't been viewed and it's hidden. The other word is currency, and it literally means money currently in use, which I found was pretty amusing. When currency, current, it's actively in use at this time. So cryptocurrency itself, as you guys already gathered, is just money created with cryptography, created with technology of securing it, both from creation when it comes to transactions and sending it from person to person, while also often hiding the identity of its users behind a handle, behind their name. So the advantage of cryptocurrencies really is that you can send it from person to person, P2P, without showing your identity, while still getting it there rapidly and not having a bank, not having a middleman. And that was something that was really unique to Bitcoin. If any of you guys have looked through the white paper, is just removing the banks or any other middleman who might take a cut and allowing a really rapid transfer of funds between anyone around the world. Matt's going to take you further through the next slides.
All right, so how do we buy our first cryptocurrencies? We already know what cryptocurrency is. We know what we want from it, but first we want to say we have to consider these questions before we start buying. We have to understand cryptocurrency to be able to understand why we are going to put money into it. What's the purpose of the crypto? If it's Bitcoin, we understand that it's a peer-to-peer electronic cash system. That means I can send you a value or some currency in exchange for maybe work or a good or service or what have you. If it's Monero, we're going to do it in secret, so nobody can see where the transaction is coming from, and it's anonymous. If we're using other cryptocurrencies, they all have purpose, or they're a utility to maybe a bigger platform or what have you. But understand what the purpose of the crypto is before you start putting money into it. What value does the crypto bring to others? And that means, is it actually usable? If you have Bitcoin and we want to understand the intrinsic value of Bitcoin, does it bring value to anybody? Is sending money from me to you without a bank with lower fees something that is worth it, something that is valuable that to society, to just the inner workings of business? Then maybe you want to put some money into it. And what do you see the future of crypto? Now, this is a very good, solid point right here, what the future of crypto is. People like Pomp or other, Bitcoin maximalists kind of look at different countries when it comes to hyperinflation, Venezuela, Zimbabwe, and how their currency is unstable, their economies are unstable. When we're looking at the Federal Reserve, like of the United States, printing lots of money to prop up the stock market so our economy stays strong. These are things that people say cause instability in our current financial system, which could make the future of cryptocurrencies such as Bitcoin or Litecoin, as a transaction of value currency, very, very popular and very, very kind of what Pomp calls a hedge against the banks, a hedge against our current system to try something that is different without an inflationary currency. Bitcoin would be a deflationary currency. So the best way to buy some cryptocurrency, if you're just getting started and you don't want to, and you're kind of scared and you don't want to, learn that much about it, is just to find a friend. You probably heard about this from a friend. You probably heard is somebody talking about Bitcoin. I bought some Bitcoin, or have you bought some Bitcoin? And if they do have some Bitcoin, have them help you walk through the whole process. It's a little bit tricky at this point. It's an early technology. So understand what your keys are, how to set up a wallet, how to receive and send your Bitcoin. And a friend could help you do that. And maybe, just maybe, they have a little bit of Bitcoin they want to sell you for $20 to help experiment with that whole process. And they can walk you through that. If you want another way to buy Bitcoin, is you want to use an exchange, which we call an on-ramp or an off-ramp. It's a way to take your fiat currency and put it into cryptocurrencies. And OKEx is a great way to do that, connecting your bank accounts, where you can just take your money from your bank, your dollars, your euro, your pound, or whatever you might have, your dong, put it into a cryptocurrency. And then if you want to sell your cryptocurrency, take your cryptocurrency and put it back into your country's fiat currency. And OKEx is a great way to do that. Other places to do that would be like Coinbase, Binance US, or other ones. But OKEx is probably the best one to do.
Matt, I wanted to chime in too. A perfect example of getting someone to help you get into your first crypto. I started with Ethereum, and then I wanted to get some Tezos, and I had a friend buy it for me. It turns out he sent me my codes, my keys over text message, and I didn't note all of them down. And I have about $2,000, $3,000 worth of Tezos now, and I can't get it. And he and I were both so beginners to the space. And every time I open my Blockfolio, I see, oh man, there's my Tezos. I wish I had a friend who walked me through it and made sure I noted everything down. I'm just missing one private key.
Good. Sorry, Danny. We don't want to lose our cryptocurrencies. Let's
Yeah.
see here. Oh, this is me. So once you have your once you have your cryptocurrencies, and you get them from a friend, just like Danny says, or you buy them on your exchange, your on ramp or off ramp, you want to secure your cryptocurrencies. And before we go to actually securing your cryptocurrencies, I want to talk about good digital hygiene. Now we are in a digital age of computers, of text messages, of social media and what have you. But so we have to be a little bit more savvy when it comes to a lot of different ways we store our information. And digital hygiene it has three aspects to it: OPSEC, PerkSec, and InfoSec. OPSEC being operational security, PerkSec being personal security, and InfoSec being your information security. Let's go into those three really quick. OPSEC. What is OPSEC, operational security? It's the process of preventing sensitive information from falling into the wrong hands. So I have a video camera on right now. What is in an operational security issue could be what's in my video feed. What can people see to try to identify not only where I'm at, or different things about me or about my accounts, my systems, and what have you that can compromise my security. Another example is, do you write your passwords on a piece of paper and leave it on your desk in your living room, or on your desk in your office, or on your counter in your living room? And people would come in out of your house and see your passwords. That would be an operational security issue. If you're on a Zoom call and you have that piece of paper on your desk, can people see that, or on your whiteboard, or any other kind of information? Those are operations that you have to take in consideration to make sure that your personal information is secured. But that goes into PerkSec, in your personal security. And this is about securing information that is about me and myself and the other people that is closest to me. In the digital world these days, a lot of your security questions are about your personal information. What's your birthday? What's your first dog's name? What's the first car you drove? What's your first address? It's very easy to go into a bar, maybe strike up conversation with somebody, and they try to mine that personal security or those questions from you that will reveal your identity to companies that might hold something that's very important to you. You're sitting in a bar, you're talking to somebody, and they start asking you random questions. You think it's small talk, but they're actually building a database of you to try to break into your security. And information security is the process of protecting. Excuse me? So information security is the process of protecting your sensitive business information from discovery or changes or destruction. Again, this is your information security, more so with business. And information security is a lot of your OPSEC, your PerkSec, but in a business aspect. And information about your business, information about your operations, information about your personnel, and what have you. But you have to really think about how you're storing this information, because people can take your information, crack into your OKEx, or crack into your accounts or your websites or your emails by knowing this.
Yes.
Next one.
So continuing on with security, we've got the suggestion of getting a separate email account just for your crypto, just for your banking, anything sensitive and financially related. One thing that I really recommend, and some of you Europeans may have heard of this, is Proton Mail. It's a Switzerland-based email service. It's free, but it's a lot more secure, and it's supposed to be separate from, let's say, governments. For example, Gmail, theoretically, if you go through the internet, provides access of content to government. And if you were ever to go into a court case, they would be obliged to share your data with the government. So Proton Mail theoretically does not have that obligation, which makes it more secure. I really recommend creating a Proton Mail account, or even just a separate Gmail account just for your crypto accounts, because if anyone ever was to try to recover your social media account, if you got hacked or anything like that, and that's the same email account you use for your crypto, they're one step closer to getting access to exchange logins or anything like that. Moving on, we've got the next step, Matt, using strong passwords. I use LastPass as a password manager, and it has a password generator. Super handy. Just create a bunch of random strings, numbers with symbols interspersed in between them, and it's free. And that way, you make sure your passwords are never tied to you as far as things that you remember, whether that's the street you're born on, or your favorite dog, or your favorite food. Turns out that some of the most popular passwords are monkey and Mustang, and of course numbers like password 1234. So because password cracking is done by software with a library of common words and numbers, it's just a matter of brute forcing their way in. If you can have a random password that is approximately 12 digits or longer, then you are much more safe than fellows who are closer to 8 digits and even regular words. Going on to the next slide, we've got two-factor authentication. I'm sure most of you know about this already. When you have your banking, it sends you a text message with a 6-digit number you need to use to log in. That's a pretty basic method of two-factor authentication. It's hackable. Matt actually has a story about this. Matt, do you want to share that story of SIM swapping?
Absolutely. Actually, it was in Consensus last year in New York. We were at the CoinDesk Consensus conference, and a friend of mine was walking through all of the people that were attending the conference with their cell phone in their pocket. And apparently, some guy was coming with a SIM cloning machine, scanning SIM cards, and was able to clone his SIM card and receive all of his two-factor text messages. So, for example, if he was trying to log into his Yahoo account or his Coinbase account, and it would send you a confirmation, it would use the text message system. Well, that text message went to the hacker's cell phone, and he lost over $100,000 in Bitcoin and cryptocurrencies. He was not happy.
Right. Terrible story, but that's the way that using two-factor authentication just through your phone as a text message is not very reliable when push comes to shove. It's much better to use a generator such as Authy or Google Authenticator. I prefer Authy because they have a nice backup system, but with those conveniences of a backup system and managing your account, they also have a vulnerability. I still highly recommend them just because if you use a long password, like I mentioned earlier, and separate email account, then you're relatively safe. Going on, of course, you want to have some sort of antivirus software. Just recently for Mac people, I saw that there is a virus going around, a Trojan going around for Macs, where if you do a Google search for something, a false result appears. If you click on it, it sends you rapidly through different websites, and then it asks you to download a Flash update. Once you have to update the Flash plugin, then it's a backdoor that allows whoever's managing that Trojan to install anything they want on your Mac. And a simple thing that they could install is just keyboard tracking. So antivirus software, keep it up to date, keep yourself clean, just to make sure you don't have anyone tracking what's going on in the computer websites you're visiting. Further, avoid fake websites. And this goes into exactly what I was just saying. There are fake results that pop up on Google. And while they do a very good job of keeping that off of your radar, occasionally people will get through. And what Matt and I both recommend is bookmarking that website and always accessing it through the bookmark. That way, you know exactly where you're going through the DNS system as opposed to going through Google.
Another way to protect your crypto, now you have your crypto, you have your two-factor authentication, you have your different emails for all your crypto endeavors, you have your bookmarks. You want to decentralize your crypto. You don't want to keep your crypto in one place. And so when you want to, you don't want to basically, it's all your eggs in one basket. If you have, say, Bitcoin, Litecoin, and Ethereum, and you're going to hodl that, instead of trade that, you want that off of an exchange. Never keep your cryptos on an exchange. Never keep your cryptos on an exchange. Never keep your cryptos on an exchange. Exchanges have been hacked in the past, and it might not be the fault of any exchange, but it's just the savviness of a hacker. But so you never want to keep your cryptos in one place, and especially not on an exchange. And you also don't want to keep it in one wallet. You want to keep it in multiple wallets. So if you do lose, let's say, your private keys for your Bitcoin, which would be super sad, at least you can still have your private keys for your Ethereum and your Litecoin, and they're in two different places. It might be a little bit of an overreach. It depends how much money you have. It depends how much risk you are comfortable with. But I would recommend it in multiple places. For example, the Winklevoss, they have a lot of money in Bitcoin. They were well into the billions at one point. They keep their private keys in 6 to 12 different lockboxes all around the country in different bits. So not one person can access the whole private key. That's how much they want to be secure. And they both don't have access to each of them. They have to be together. And if not, they have a backup system to make sure that they have, if one of the Winklevoss twins die, they have access to the keys, and that is within their will. Within their will, and anybody who has an ample amount of cryptocurrency should have their cryptocurrency in a will that you grant it to somebody else. But you just don't put your private keys in the will and tell your lawyer to write down your private key in the will, because your lawyer then can steal your Bitcoin and run off with it. And if it's a lot, then you won't ever see your lawyer again. Or maybe you will, because you just don't know it's him or her that stole your cryptocurrency. What you want to do is you want to put in your will the instructions of how to go get the instructions for your loved one. For example, you write the instructions of how to access your cryptocurrency and access, say, your ledger or wherever you're keeping your cryptocurrency, on a piece of paper, fold it up in a sealed envelope, maybe with a seal, and put it in a lockbox. And then in your will, you tell your lawyer to give the key to the lockbox to the loved one that you want to give it to, or pass it to, or take them to the bank so the bank can let them in to that lockbox. Then they follow the instructions. But you really want to make sure that there is a way to pass your cryptocurrency. Heaven forbid something bad has happened to you. But don't be scared. Don't be scared. Cryptocurrency is very, very easy and of a way to store and protect if you are comfortable and well versed in it. Once you know how to do it, just like anything else, it's like riding a bike. It's very easy. Diversifying your portfolio. Oh, I'm sorry, before I move into that, Danny, would you like to talk any more about securing your crypto?
I guess the only thing I want to bring up is hardware wallets like Ledger and Trezor have the advantage over, let's say, a paper wallet, which I guess they both have two different ends of security, right? Your paper wallet, you're not going to get hacked, whereas there have been various vulnerabilities for Ledger and Trezor in the past. But on the other hand, paper wallets degrade. So balance your use of hardware wallets, paper wallets, or whatever you feel comfortable with, and make sure, like as Matt said, you're decentralizing across them to reduce your point of attack for anyone who might try to get your crypto. And that's all.
Hey, Danny, what is a paper wallet?
Paper wallet is literally a piece of paper where you write down your public and private keys.
That seems simple. Thanks, Danny.
Super. You're welcome.
All right, so diversify in your portfolio. Again, you don't want to put all your eggs in one basket. Now we're talking about the investing aspect of cryptocurrency. You don't want to put all your money into, say, Bitcoin, or all your money into, say, Ethereum, or all your money into, say, Litecoin. You want to maybe figure out a different way to invest. What is the most promising aspects? What do you think is going to have the most use cases? Going back to that, understanding what the cryptos are used for, and the value that they bring. You might want to throw a little bit in different cryptocurrencies, even though maybe the majority might be in Bitcoin, but you kind of like Roger Ver, so you want to buy a little Bitcoin Cash. You kind of like this fake Satoshi, so you want to buy a little Bitcoin SV. So you never know. You might think like, hey, maybe Craig Wright is the real Satoshi. I'm going to give him a couple bucks, which I would say that's probably a bad bet. But you could do that. That is called diversifying your crypto portfolio. Now, there are indexes on different platforms. I am not too sure, and I hope OKEx could chime in and let me know, that you can put a bunch of money where they kind of like put your investment, say you put $1,000 in there, they spread your investment out through the 10 major cryptocurrencies in a way that is proportional to their market cap. For example, if there's $1,000 and Bitcoin has 80% of total value, they'll put 80% of that $1,000 into Bitcoin, 10% into Ethereum, 5% into Litecoin, and so on and so forth. Though using those kind of index funds are a great way to easily diversify your portfolio. But remember, crypto is speculation. It is speculation. It is not mass adopted yet. The PayPal and Venmo did say that they are going to start having ways to buy and sell your cryptocurrency, which is amazing. But there is not many ways to use your cryptocurrency. There's not many industries that are using the mainstream cryptocurrencies right now. So it is just speculation, basically a hedge against the banks or the trajectory of what cryptocurrency, Bitcoin, and these digital assets will be used for. So there is no low risk cryptocurrency as there would be, say, bonds or something like that.
Cool. And now we're moving into investigating new blockchain companies. And this is just as simple as when you find a new crypto, they're brand new, they're before ICO or anything like that, make sure you do your own research. I don't know if you guys have done this, but reading through the original Bitcoin white paper is pretty valuable. There's a lot of interesting data there. It's often referenced in more recent white papers, and it's just sort of the OG, right? The original gangster white paper. If you have trouble getting through the technical data, the technical terms, and I really recommend just checking out YouTube. That's originally how I got through in the first place. I'm a web developer.
Decryptionary.com.
Or decryptionary.com. I mean, honestly, I have some good terms in there, but YouTube is a great place to get through it. I'm a web developer, and even still, I sometimes struggle with some of these different terms. So going and through their white paper will give you a lot better of an understanding. And then it gives you a foundation for when you go ahead and look at a new crypto that you're interested in. You can check out their white paper, and it'll actually make a lot more sense to you, even the structure of the white paper itself. Continuing on with that, you want to make sure you research the team and their backgrounds. You want to make sure that you confirm the location of the organization. Are they based in your country? Check them out. Go to Google Maps even. Just make sure that they are where they say they are, and not just some sort of post office box, a PO box. When it comes to researching the team, go ahead and look at their track record. Have they worked on previous projects? Are they developers with experience that you can check up on? Make sure you verify this, because as you have seen, there are bad actors who will try to con you. Next slide, Matt. We've got, what does the organization do? Do they really need blockchain? This is an interesting point, because we've seen organizations, hey Matt, what was that shipping company?
Maersk.
Maersk, great. Big shipping company Maersk was mentioning blockchain when it was hot. They used it as just a keyword to try to get more traffic, to try to get more attention. Do they actually need it? I mean, it's probably a good idea in the long term, but can they implement it? Are they using it up lines with their source? Are they using it further down the lines with the consumer? Take a look at how it's actually being implemented, whether it's useful, and then further, are they using blockchain as a way of getting around the SEC regulations? Are they using it as a way of avoiding to pay SEC fines or any sort of fees that might be there? Because more recently, with the more involvement from the SEC, there's no real need to skirt those, to get away from those sort of regulations and risk your money and the whole organization itself, right? Tezos had that problem as well when the SEC was digging into it. Matt, do you have anything you want to share on that?
Yeah, actually, I would. Going back to the shipping company, the biggest thing, one of the biggest key points for the shipping company is not only were they using the keyword blockchain to try to create more confidence in their company, but their blockchain was centralized. And what you really want out of a blockchain and part of the whole blockchain ecosystem is that it is decentralized. So what's the difference between a centralized blockchain and a centralized anything else? It's in control of one company. It could be rolled back, because we have seen that you can roll back blockchains. You can change the data at will. decentralization is the key that makes blockchain so secure, is that every computer is going to have the same ledger and same ledger on it. So we can all check to see what's going on. And if somebody is centralized and holding that data, it's not that secure. And going back to the SEC regulation, as Danny said, we have seen many ICO exit scams and fundraising models that just are quick money grabs. We want to do this in a lot of big motivation about the blockchain and Bitcoin and cryptocurrency ecosystem is that we are trying to create a new system outside of the government, outside of the big banks, outside of, well, regulations protect the consumer a lot of the times. And if they are trying to skirt SEC regulations or other regulations that are in your country because they just want to they just are talking about this grand scheme ethos, they have a very easy way to scam you out of money without any repercussions.
Yeah, one thing I also want to share about that is you have governments creating their own crypto. For example, there was the Petro from Venezuela, and then China. There's a lot of news in America about China creating their own cryptocurrency. The funny thing about it, though, is those are permissioned blockchains, right? In other words, the government is the one who has access, and they provide permission to anyone who wants to access the blockchain. And there's a pretty good chance the people using it are not going to be able to maintain that ledger, which means creation of cryptocurrency, handling the transactions, the security, and the actual forward momentum versus rolling it back is all handled by that one entity. So if there were any changes that they wanted to make that you or I didn't necessarily agree upon, they could, and they don't have to tell us. So that's the interesting part about blockchain. Is it a permissioned blockchain where they're the one who's limiting access? Or is it available in public for anyone to manage, to view, and to track? All right, Matt, I think we're done with this slide. Let's move on to the next one. Here, it's just kind of a summary of different tools you can use. GitHub, Slack, Discord, Reddit, Telegram, any of these different tools where you can meet the team. And now, of course, Zoom with OKEx, where you can meet the team and chat and figure out what are they doing, what's the latest technology, how are they working with you, and how can you get part of it.
Now, the key question, to hodl or trade?
Or is it hodl or hodl? That's the key question.
That is the key question, and it's hodl. We all know it's hodl, brother. Come on, man. Come on. Don't start drama where there's no drama, man. Come on. So hodl or trade? If you're going in there to trade cryptocurrencies, this is something I really can't tell you what to do or even give a solid advice with this, because if you want to trade, it's a skill set like anything else. It's a craft. Learn to trade, and you can make a lot of money doing it, or you can lose your shit. Also, but if you're gonna hodl, just put it in there, forget it. Use our security that we taught you. Make sure that you're diversified. Make sure that you are storing your keys, your OPSEC, your digital hygiene properly, and put it in a safe space. And just put your cryptocurrency there. The only thing I want to say is a lot of people in crypto do not have a kind of a lot of people in crypto don't have a sense of scale when it comes to what kind of profit you should make. On average, returns for the U.S. stock market is around 7%. Some years are 2%, some years are 15% returns, some years you're losing money. But overall, if you put your money in the stock market and you leave it there, you're going to get a 7% annual return on medium risk investments. So do you want to 200x your cryptocurrency in the next year, or 500x or 10,000x? Those, I would say, are probably pretty unrealistic. And you really want to figure out like where your exit points are and listen to them or reevaluate. So the only thing I can say is, if you're investing in crypto and you're hodling long term, be realistic with your gains. Are you going to put $1,000 in there and it's going to turn to $1 million? Probably not. But can you turn $1,000 into 1,500? It's quite possible, but don't think that you're not making a lot of money off of that, because that is a hell of a good return, and it's way better than you're going to do with the stock market typically. So just have realistic expectations for your investments into cryptocurrency and put it compared to other investments so that you're not having unreasonable expectations.
I'd like to chime in there too. You know,
Yes, sir.
I'm going to give my personal numbers of my portfolio back in 2017, early 2018. I
Bro,
started with
if we start that, we're gonna start crying, bro. Come on, man.
I'm gonna do it real fast. I mean, I put like $200 on Ethereum, saw it grow to 1,000 within a few weeks, and then I got into a bunch of other coins, everything from Monero, CF Coin, anything you could see. And I think by end of 2017, I had about $28,000 from a $2,000 investment. I pulled out my initial $2,000 and I was like, cool, cool, cool. I'm just gonna keep riding this. I'm gonna hit 50K. I'm gonna hit 100K. It's just gonna keep going. I mean, I was obviously an amateur, didn't quite know what I was doing. I didn't research all of their white papers, even though I looked into a couple of them, and I just didn't have an exit strategy. I didn't have a target, and I'm sure those of you who were in crypto back in 2017 also have similar stories. But this is just a lesson for anyone else who gets into it. Make sure you have an exit point, and if you hit it, pull out. Even if you're just pulling out half of it, pull out some profit so you can feel good about it, because the market moves swiftly, and that 28K is back down to something like $2,000 right now. So it is what it is.
Well, now I want to tell a story that is along the same vein as Danny's. If you pull out your money, don't dwell on it. Don't look at it and go, "Oh, I could have, would have." Hindsight is always 2020. And my story is, I just got paid around 6 months ago in a cryptocurrency, a newer one, called Rune, which is Thorchain. They have something called Rune, and it's on the Binance chain. And I was holding all of these shit coins since 2016, 2017. And I saw 2017, take me to the moon, and now I'm holding bags. All my coins are bags. I wanted to hodl everything because, well, stupidity, be perfectly honest. But then I got this Rune coin around 6 months ago, and it was about $4,000. And I was like, I'm not going to follow the same pattern. I have $4,000. I'm going to cash it out, and I'm going to bank that money because I don't know what's going to happen in the future. And I did. I looked today, and it is $95,000. So what's the point there is, yeah, I could have hodled it. I could have made $95,000, but I also could have been, that $4,000 could have been $200 as well, like all of my other cryptocurrencies. You can't look hindsight 2020. You have to make a plan. You have to stick to it, and whatever happens in the market happens in the market. More times than not, you're gonna look back and go, "Thank God I got out." But sometimes you're gonna be like poor Matthew Aaron over here that goes, "I could have had $95,000 in that Tesla that I've been wanting for a long time." Sad days. Sad days.
Bad day. Okay. So this next slide is just covering the process of continual learning, of staying up to date with technology, because this stuff moves fast, man. I've been focusing a lot on web development lately, and just seeing some of the new coins, the new technology that's been coming out in the last 6 months, in the last year, is pretty wild. Matt, if you go next slide. When it comes to keeping up with technology, I really recommend just news sites. Just visit your favorite crypto news sites. I mean, everyone has their favorite, and just stay up to date on forums, checking out your favorite chat channels and Telegrams, Discords, and that kind of thing. And of course, talking with your friends. Matt always keeps me up to date with some interesting new tidbit. For example, PayPal that he just mentioned earlier. Make sure you stick up to date with that coin or technology you're very interested in. Matt, you want to chime in on this?
Yeah. Staying up to date is going to help you with your cryptocurrency as well. A lot of coins are starting out with the new chains, but they might start out with an ERC20. To keep up to date will allow you to make sure that you're not stuck holding ERC20 coins when they go to their new chains, or evolving into new wallets, or dropping different technologies and adding different technologies. Sadly, this is a rapidly developing market, so you can definitely miss some of those changes, and it could lock your cryptocurrencies. And you might have to go through a lot of hoops to try to get those cryptos back, or you just might lose them. EOS.
Yeah.
And I think that that's it for us. So that was a step-by-step guide to cryptocurrencies. We are here for any questions. If you want to put the question in the chat or just chat us to ask any questions about what we were talking about, or if we're just talking too fast and you want us to repeat anything, we will be happy to.
You're talking good things, it's basic things, but it's main in crypto, so we are happy to hear this reminds it's really important, and we want to hear everything what you prepare. I think everyone will agree with me.
Thank you, man. We
Thanks.
appreciate that. Is there any questions, comments?
I do have
Yes,
a question.
sir.
Thank you, Matthew. Thank you, Dani, for presentation. You were talking about investments in crypto, and hodling and speculation. You know, investing, trying to invest in Bitcoin, Litecoin, Ethereum, OKB, so on. But you never, in your presentation, you never mentioned stable coins. And we were talking about cryptocurrency. You never said anything about stable coins. What do you think? What is their role? I mean, I think it's very important. I mean, the USDT capitalization and capital flow is unimaginable. It's huge. So how you can manage? Shall we keep some part of our savings in stable coins, especially well-established one like USDT? Thank you.
Matt, you want to start that?
Absolutely. I have a lot of opinions about stablecoins. I think stablecoins are amazing. I think stablecoins are the hedge against the exchanges that that usually go down when the Bitcoin price rises. If we remember in Coinbase and what have you, during 2017, 2018, Bitcoin was traveling on its way up to 10,000. Coinbase went down. When up to 15,000, Coinbase went down. How do you sell it? How do you exchange or sell your cryptocurrency to fiat? Or exit if your exchange keeps going down. And so I think having your Bitcoin and having these stable coins across multiple platforms and a way to transfer from multiple platforms is a great hedge against any technical errors that an exchange could have on this next bull run. To keep it into those stable coins is a way to lock in your profits and wait out the technical errors until everything clears up and the market calms down. And those stable coins can be found within wallets too. Some wallets have quick exchanges. So I think stable coins are an amazing thing. USDT has always had a lot of lore and rumors around the purchasing and the minting of the tokens. It also has been very much in question of what those tokens are used for when it comes to how the money is being used as liquidity through different exchanges to pump up Bitcoin price. I would say that I would be very cautious of USDT, but USDC, OKB, or any other coin that is used as an exchange token or a stable coin, I would look more closely into those. USDT, my opinion, is something that I would not trust to keep my profits in stable, or to be around for long term, because it's just there's so much mystery and so much speculation within USDT and their practices.
Yeah, I want to say I agree with Matt on that. I've used USDT just as a means of moving coins between while I'm trading, but it's not something that I'll hold the value in. I literally just use it when I'm trading, and it's nice when the market's moving if you want to exit to hold it temporarily, but for a long term, I won't hold anything in stable coins. Either I'm going to keep it in the actual coin because I'm hodling, or I'm going to put it back into fiat and I'm going to use that money myself. So I will use a stable coin, but I don't Actually, I want to mention that there were some folks when stablecoins were first coming out, they were buying it thinking that it was going to go up in value, and that just doesn't make sense because the stablecoin literally is supposed to be tied to a fiat in most cases. So I won't invest in a stablecoin either. Just want to point that out.
Yeah, well, here comes a question. Why wouldn't you invest in stablecoins? For example, some platforms have some staking or investment mechanism instruments where you can borrow your money, for example, on some exchanges, and then other users use it as leverage and so on and so forth. I mean, I'm asking because before I used to work in a stablecoin company. It was pretty successful. I did a lot of OTC, and I got used to stablecoins. So I see it's a kind of a new standard for blockchain-based currencies and let's say a connection between traditional financial institutions and crypto.
Matt, do you want to start that one off?
Look, I guess it's just my question, my idea about stablecoins is definitely I think an older school idea. When it comes to staking and things like that, I started in 2016, and when 2017, 2018, I saw wallets get hacked. I saw coins get forked. I saw coins get locked up. I saw blockchains break and get hacked. And when and staking is one of those things that are coming to be more mainstream right now. And if you want to put your money and invest it into stake for great returns, I think it's an amazing thing. And if it's a stable coin that you can just lock in for loans or micropayments or what have you, I think that it's an amazing development. I personally come from a more of a skeptical look of, where am I going to keep that much money, and who has access to my private keys, or who has access to that money and that transfer? And I am of the point of the old school, where it's like, I don't need anything online. I don't need anything in anybody else's hands. No custodial services. If it's my $10,000 or my $100,000 or my $50, unless it's something that I don't mind losing, I am going to keep it in my ledger, my treasure, or what have you. Again, that I'm just old school like that, based off of just losing my shit a couple times and hearing so many stories from doing a podcast with almost everybody in the industry, and that being the theme is not your keys, not your coin. So it's the same thing with a stable coin, not your keys, not your stable. If that has changed, and then maybe since you've worked for a stable coin company, maybe you can tell me and school me how stable coins have developed. Can you control your private keys and still stake your stable coins and that money?
Well, yeah. In our case, yeah. Sorry, Dani. Yeah.
Go on, please, Nikita.
Well, I think it's a very long talk. I mean, it's not supposed to be only about stablecoins, but yeah, personally, I think that stablecoins have a very important role in our industry, and especially if speaking of OKEx exchange or any other exchange. I mean, sometimes it's the only way how you can actually trade your money. Most of coins, when they're being listed, they're used one trading pair against USDT, or just maximum 3 pairs to Bitcoin and to Ethereum, which are basically kind of becoming new standards. But yeah, so I actually put more trust in stablecoins recently. Yeah.
Any other questions, comments?
Thank you very much, Dani and Matthew, for the presentation. It's a good moment to learning about us. My question is that one of the big challenges for the development about crypto market is the security. You mentioned this point in the presentation, and however, in this moment, the attacks for the change, it's one of the points with more difficult to for the risk about the investment or about the circulation with cryptos. And then what is, but in this moment, really the change and the users is increasing for the next months or for the next years. And there are at one moment that these users, it's a very, very expansive maze of the users in the crypto market. And what do you think about the next month or about the next years? What do you think that you consider that what are the elements that you consider that can help for these levels about the security for the exchange?
So let me just
go ahead.
You were asking about security for exchange?
Yes, to prevent the cyber attacks. And we see that recently, and in these last months or years, one of the points with more risk is the cyber attacks to lose the cryptos, or in this is one of the elements for the change with more risk. And then, but at the moment, we are increasing the users about the transfer with crypto markets for investment in cryptos. And then what happens the next months, with what elements the change can be put to ensure this security for these users?
Yeah. Okay. So my opinion of what elements can exchanges put into increase the security for these new users coming into cryptocurrency. In my opinion, it's all about the easiest is the best. So my mom wants to get into cryptocurrency. My mom would love to get into cryptocurrency. She's been begging me to buy Bitcoin, but she is so scared about going onto the exchange and understanding the security of it, the putting her ID into an exchange, to linking her bank account. She is so worried that people are going to steal her identity and her information. I think my personal opinion is that you need to have KYC and AML. It's important, but I think the biggest thing is to educate and explain to these new users why it's safe for them and understand what it's for. I personally think that a good operating system or a good UI, user interface for the head consumer and it's very clear and clean, is very key. But the other aspect is how to educate the consumer to know that it's safe, and what backups do you have to make them feel safe. One thing that I know that, say, for example, and I don't know if we like talking about OKEx competitors, but Coinbase does, that makes a lot of Americans feel safe, is they do have insurance for their fiat currency. Their up to $100,000, the FDIC insurance is insured on their exchange. So if you're holding that and they get hacked, we have at least a way of feeling secure that we're going to get some of that money back. These are the things that I think people really want to understand, is what is the exchange or doing that protects my investment if I'm using you. And right now all we see is, for example, Quadringa, all their money's gone. The hack of the exchange, in the Japanese exchange, all their money was gone. Luckily that exchange said, we will reimburse 90% of that money that was lost. And I think those are the things that people really want to hear, is if something happens to mine and it's not my fault, it's your fault, then the exchange will get my back. I think that's the most thing, is that security, that relationship.
The only thing I want to share as well is something that traditional banks do that I think exchanges should allow as an option, is microtransactions when you're moving between banks, when you're moving between exchanges. So if I'm moving money from my Bank of America to my Chase Bank, one thing they often do is they'll send like a penny and 2 pennies, and they'll do it at different times, and they'll ask me to verify exactly how much went through. And that is a really nice measure to make sure that I know my money is being received and sent by the correct banks. I didn't incorrectly type in my account number. And if that was happening, if that was a possibility for exchanges, then it'd be so much easier for a person moving money that they consider to be high volume. For example, for me, for my parents, if they were moving $1,000, that's a lot of money in Bitcoin that they have no idea whether they still can't wrap their mind around Bitcoin. So $1,000 in it is a lot for them. For
That's
you
a
or
very
me,
good
maybe
point, Danny.
we're moving $10,000 across. It would be very nice if we could just do a quick little, $100 here and just make sure it works.
Right. So basically, you're saying to put the private key or put the public key in there that you're going to send it to, and the system automatically just sends like a 2-cent transaction to verify that's the right person. Once the receiving end presses OK and you verify both ends, then it makes the whole transaction.
Correct.
That's beautiful, Danny. That's genius. Why don't people do that right now?
It's a good idea for OKEx. Is there anyone else who had a question?
Yes.
I hope that answers your question.
Since we're talking about security and assurances for exchanges, I wanted to know what you guys think about the idea of a proof of reserves for exchanges, because I know it's a topic that has been going around for some time now, and I think it's a really interesting idea for the clients, the users, to actually have the assurances that the funds they have on the exchanges are actually there. And it comes to the idea that you guys talked about, like not your coins. So what do you guys think about that?
To be perfectly honest, I don't know anything about it. I can't comment.
I haven't heard of it either. What is your experience with that? What have you seen, Guillaume?
Yeah, so proof of reserve is the idea that exchange, the same way like stable coins would do, would provide the proof that they actually have the coins on the exchange. And so that's something that could reassure people that it's somewhat safe to keep your coins on the exchange, at least for some time, like to know for sure that your coins exist.
Yeah. Okay. I know what you're saying. Okay. I thought it was another like proof of work, proof of stake, proof of reserve. Because I've heard so many ways to mine and stake and stuff like that from different coins. Like proof of what was the proof of who was doing that one crazy one? I'll think of it. It was like proof of some crazy shit, and I was like, you guys are just grasping at straws. I think proof of reserves is 100% is key, honestly. But I think it's how do you prove the reserves? I mean, that's what's problem with USDT right now is they say they have the reserves. They are audited ish by private, their own people that they say, and then they put out some numbers. Say, look, we have all of our money, but do you really have your money? So I guess the real question is, how do you audit private, or how do you get like a third party to audit like an exchange or something to show that they have the reserves, and then you trust both systems, the exchange or the stable coin or whatever you're talking about the reserves for, and the auditing body, and to make it secure. Because I mean, and anybody can say that they have. I mean, I could tell you I have X amount in my bank. I could have Danny come over to my house and prove it to you. I'll take your money too. But so how do you prove? How do they really do that? USDT has done a piss poor job of actually convincing anybody that they have all this money coming in and out of their stable coin.
Yeah, I don't have anything to add to this. I'm going to look into it some more. I agree though. USDT has kind of been the worst offender when it comes to that space, and it's sort of like you're trusting. I mean, Bitcoin is supposed to be not involving trust, and yet when we're doing this proof of reserves, we end up going back into trust. So you got to try and balance that.
If there's a smart contract, a way that it could be all proven on the blockchain somewhere, where every USD that's converted into USDT is on a blockchain, where I don't know, that's connected to their bank. I have no clue. It's just, it seems like they're, again, like Danny said, and I love that. It's like we have to trust somebody in a trustless system. It's ridiculous. And I think the same thing with exchanges and whatever. And I think that's the beauty of a DEX is like you don't need the trust. It takes the trust out of there. I mean, how many exchanges have been hacked? How many times have you had, people exit or back end or just their OPSEC or the digital hygiene because they were running their exchange off of their own personal laptop in their mom's basement, found out that that's the extent of their security. I mean, that's the problem with trust in this whole space. Well,
Thank you,
what do you
guys.
think, my man?
Well, I mean, I think it would be an interesting idea to implement. I mean, I guess since it's cryptocurrency, they should have a way to prove, you know, with the private keys that they actually are in control of these keys. But I guess it's just not widespread right now. Maybe it will come with the next bull run where a lot of people, you know, get worried about that again. So I don't know. I guess we'll have to wait.
I have a
Yeah.
comment if you're interested to hear it.
100%, bro.
Yeah, Guillaume, yeah, addressing your question. I've been in this industry for 4 years almost. I used to work with many Chinese exchanges, Korean exchanges, you know, Russian exchanges, Ukrainian exchanges. And I would say it's kind of a bit shady business. Yeah, and you know, if you can check the coin market cap, you can check the coin gecko, you can check how all these exchanges are drawing their liquidity, the trading volume, you know, between the coins. I mean, there's like also many blockchains and coins which are based on those chains, and even like all these projects when they get listed, they have a minimum trading volume which they set up between two accounts, you know, and do some market making and so on and so forth. But I think in the current stage, we are very far from having something like proof of reserves for exchanges, because first of all, they're all in very different, they're based on different countries and regulations in different countries. Second, we don't have a standard or some kind of regulation which will say, okay, all the exchanges must pass some kind of auditing, like, or having some kind of license like the banks have. So I don't think we will see anything like proof of reserves in coming 2 years. So my opinion. Thank you.
Wow, thanks for sharing that. That was definitely interesting. Anyone else have any questions?
Yeah, I would like to ask a quick question in terms of adoption. What do you think are the biggest limits at the moment and for the future of general adoption for crypto in terms of using crypto as cash, all these kind of things? Because that's something I'm really interested in. It's basically peer-to-peer. Bitcoin is a peer-to-peer cash electronic system. However, nowadays, not many people are able to really use it as cash on their daily basis. So what do you think are the biggest challenges for that?
That's an
I love
awesome
this
question. One that, yeah, we've talked, oh, Matt, you've got a little bit of an echo. But that's one that we've talked about a lot. While he's sorting that out, I'm just going to mention, so I live in New York City, right? That's what I'm trying to show with my background. But one thing that we have a lot of adoption recently is just trading NASDAQ trading Bitcoin on NASDAQ or on any other different platform for people in the financial space as a hedge against standard investments. And so I've been seeing a lot more adoption in the financial space, but as a P2P or as a business to consumer, B2C, it's very little. And that's something we were hoping we would see more of. And I did see a bit of that when I lived in Silicon Valley. San Francisco, you could buy coffee and stuff like that. In Portland, you could there was this bar that I used to go to, and you could buy a beer with Bitcoin, but I never did actually. It was just not the easiest thing to do. Matt, I think for me, it was ease of use that I saw friction. What about you?
I'm gonna have to just say why. Why would you want to use it? I think the answering the question why would you use it is going to answer all the questions of why is there not mainstream adoption. So first of all, why would you use it when it's a appreciating asset? You're not going to want to spend something that you think is going to go to 50K by the end of 2021, or that's going to be at 350K if you listen to the moon by the end of fourth quarter of 2021. That's the first thing. So you're looking at these appreciating assets, and you want to go buy coffee, and then we hear about the pizza guy that had like what was it, 10,000 Bitcoin to buy a pizza, and then you don't want to be that guy. That's number one. Number two is what do you need it for? What do you need it for? To buy coffee, to buy this, to buy that? There's only a couple of people that need that. Roger Ver, all his money's into Bitcoin. Tim Draper, all his money's in Bitcoin. So they have to liquidate Bitcoin. Maybe Brock Pierce, all his money's in Bitcoin. Liquidate some Bitcoin to fiat currency to do his purchases. So they are working on these, innovative on-ramps and off-ramps, and they want adoption because all their money is sitting there in Bitcoin, and they want to skirt taxes. But us, we get paid in dollars. I get paid in dollars. Danny gets paid in dollars. Everybody gets paid in dollars to the bank. Why do I need Bitcoin? Why do I want to transact in Bitcoin? And then we want to talk about the P2P systems. There's Venmo, there's PayPal, there's Apple Pay. I could send a text message right now and send my brother cash. Other than that, why do I need it? So I think the real question is, why crypto? And if it isn't a appreciating asset or a deflationary currency for the future or a hedge against the banks, I don't see any point to cryptocurrency at this point. Me personally, as a P2B electronic cash system, unless you want to go about overseas. One of the best things about doing business overseas is being able to, with people from overseas, and doing something like Crypto 101. Danny was in America. I was living in Taiwan at the time. I had a writer that was in Australia. The best thing about cryptocurrency in that aspect is I was able to pay everybody for very, very little fees without the government really getting into my shit to know that I'm sending something back and forth and we're doing transaction in business. That is a beautiful system. But what I had to do was take money from fiat, put it into cryptocurrency, pay everybody, and then they took their money from crypto, put it into fiat so they could buy their coffees. So there's actually interesting, a P2P system, there's more friction than there is for a fiat system, especially if you're living in your own country and you have Apple Pay, Venmo, and PayPal. So I guess the real question is why? Why do we need it? I think once Facebook gets their shit off the ground and the Libra, and we're going to be swapping on Marketplace and texting Libra back and forth to all these different people, cryptocurrency and Bitcoin and Litecoin is really going to have a shit time unless they're going to do an on-ramp, off-ramp and exchanges between the two. But why would I do that? Because I'm hoping my Litecoin is going to go to $500.
Okay, fair enough. I guess
I'm a skeptic.
Okay. No, it's just I might be in a really different position because I'm actually living in Vietnam where I cannot use crypto at all. Like, it's illegal to pay with crypto. You can hold crypto, trade everything you do, but you cannot pay for a service or anything with crypto. But in the meantime, I'm actually working for a company based in New York that pays me in crypto. So I would like to actually take off that friction of having to do a remittance every 2 weeks to transfer my money from my crypto wallet to my bank account in VND. You know, that's the kind of, the last case you actually mentioned is actually the case I live. So that's why I'm really interested in that.
Yeah, so I guess you're 100% right, man. I got paid when I was in Crypto 101 in Ethereum for the most part, and I paid people in Ethereum. Everything I did was in Ethereum, and I love being part of that ecosystem. But at the end of the day, it just wasn't practical. You know, it's like my bank in Taiwan, I couldn't take my Ethereum and put it into my bank in Taiwan. I couldn't use my cash or anything, so I just had all this Ethereum that I couldn't do anything with. So I had to actually get a job that paid me in fiat currency.
Yeah, it's a funny thing because you're talking about cryptocurrency versus crypto assets. And a lot of people view Ethereum, Bitcoin, Litecoin as an asset. They don't necessarily want to liquidate. And with the pizza, that's a funny story because they were trying to make Bitcoin more liquid at the time. They were trying to increase the P2P transactions. So they just invented this transaction of sending Bitcoin over to get a pizza. So whether it's going to be more useful on a personal level, I think eventually it would be. I do think that it's moving in that direction, but it's a hell of a lot slower than the maximalists say on Reddit.
I think there's been a couple of people here that's been in crypto for what, 4 years already, you know. So I mean, we've all been talking about mass adoption. It's coming. I still can't go to Starbucks and buy the shit. So buy anything with Bitcoin. I don't know what's going on. You know how much the market would have pumped if they got the news back in 2017 that PayPal and Venmo was going to be able to buy Bitcoin with it. Oh my God! Right now, nobody even gives a shit.
Is there anyone else who had any sort of questions?
So in summary, before I look like a total skeptic, but in Bitcoin and the most skeptical person in the world, my vision for cryptocurrency and Bitcoin in general is that we are building something to be the hedge against the banks, to be the hedge against to create a future that we kind of know what we want out of it. When it comes to more transparency with our financial systems, when it comes to our money, our tax dollars to be used in a way that we are proud of, not maybe military spending and foreign wars, or printing trillions of dollars like the U.S. government just did the other day to prop up the stock market. That's the kind of thing that I'm really looking forward to in cryptocurrency as a way for the people to rise up and fight back against this crazy, skewed, manipulated financial system. And I think once the people take the power back, or at least have the tool, the power, the weapon to fight and take that power back, that's where we start getting more leverage. Right now, we have no tools, we have no say, we have no leverage when it comes to the big banks and the current financial system. But Bitcoin does give us that power. Cryptocurrency and blockchain does give us that power to start making demands and having that conversation if we want to start using it. So that's why I like it. That's why I'm into it, and that's why I am making and still working in cryptocurrency. But to be perfectly honest, and to go back to everything else I said to this whole thing, is it's a little bit unsafe, it's a little unstable, and well, I don't see much movement when it comes to mass adoption, but we do have this tool that we could use maybe in the future.
Yeah, and the only other part that I want to say, Matt and I both spoke about this because we're still bag holding a bunch of shitcoins, right? I think you and me both, Matt. So one thing that we really like about this space is the technology itself, just the direction for blockchain, the way it's going to be implemented on a level that has nothing to do with cryptocurrency itself. The future of tracking data on a ledger that's public. There's a lot of opportunity in that space for technology, and we're both really excited for that as well.
I think voting on the blockchain is still one of the biggest things I want to see implemented. I think forget mail-in ballots, forget going to polling stations. Voting on the blockchain with your private keys is the future, in my opinion.
I agree.
If there's any other questions or discussions, then we will leave it at that. I want to say thank you, everybody, for coming to the 7-Step Guide to Cryptocurrency with Mr. Dani Amsalem and Mr. Matthew Aaron.